Consumer staples among the leaders here in today's gains after Pepsi posted a beat on both the top and bottom lines. They also raised their full year forecast. Taking a look at some of these numbers, organic revenue up 16% growth there. The growth was also broad-based. North America and also global markets each delivering that 16% growth. Snacks were up 20%. Beverages were up 12%. We had the CFO, Hugh Johnston, on Yahoo Finance earlier today, and he was basically saying that Pepsi has historically done well even into a recession. So, Rochelle, maybe that explains the strong numbers here. I think the question, though, for Wall Street, as we do see the strong report come out of Pepsi leading the way for this current quarter, whether or not this is going to be a trend, maybe earnings aren't going to be as weak as we had initially expected, or rather, if Pepsi will simply be an outlier here.
It's interesting. Obviously, we're still very early in the earnings season, but perhaps this speaks to the consumer that they're not pulling away from brand loyalty. They are sticking with some of these brands. Obviously, Pepsi also owns Doritos, Gatorade, and a number of other brands as well. And consumers clearly still sticking with that loyalty and still willing to spend a premium for some of these brand names versus, say, some of these store brands. We know that as inflation has peaked, people have turned to some of these grocery store brands. But as we're seeing consumer staples still going strong at the moment, as we're looking at some of the ones on the screen here, Coca-Cola, Pepsi, Tyson's, Campbell and Kellogg, enjoying some gains today, showing that people aren't pulling back, at least on some of these things, despite high inflation, Dave.
Yeah, and Sean asked which of those things will happen. I'm just going to go with yes, because overall, I think Pepsi is going to continue to grow. Snacks and beverages will continue to be recession-proof because they've talked about raising their prices. Has not impacted one bit the demand. In fact, their CEO says our category seems to be growing faster than food. Food is growing faster than non-food. I don't think that's going to change in spite of all the ups and downs potentially economically around the world. I don't think overall they're going to be the rule of what we see in the quarter. With the exception of booze, my friends. Tilray, we really focused on their earnings in terms of being a Canadian cannabis company. They saw their cannabis revenue down 9% in the quarter. Guess what booze was? Up 33% in the quarter. Cannabis down 9%. Booze up 33%. We saw that with Constellation Brands as well. That said they're recession resistant and the demand has not dropped off. So again, yes, I guess would be my overall.
Yeah, and I also think it's interesting just the commentary that we've gotten out from Wall Street so far. Wedbush was out saying that this is a positive read-through on expectations for the broader sector, for the broader beverage sectors. That points to what you were saying just in terms of non-alcoholic and alcoholic beverage companies here. And also Pepsi was raised to a strong buy at CFRA, a 12% upside there after the earnings beat on both the top and bottom line. So the street's encouraged. I hope this is a trend, but we'll see.
We love our snacks.